The markets are closed, but the business stories are just heating up. Hello, I'm Raine Musñgi. Catch up with us on Newsfeed Business. The U.S. Federal Reserve is in no rush to cut its short-term interest rate again, given an economy that is strong overall. In opening remarks at a Senate Banking Committee hearing Tuesday, Fed Chair Jerome Powell said low unemployment and inflation that remain above the Fed's 2% target. He reiterated language used after the Fed at its January meeting held interest rates steady, saying the current policy stance with the benchmark Fed funds rate in a range between 4.25% and 4.5% is providing flexibility. Powell indicated further cuts would hinge on inflation declining and the job market remaining healthy. He referenced only obliquely the risks and uncertainties the economy faces as the new Trump administration imposes broad new import taxes on some countries and industrial goods, deports immigrants that have been a source of recent labor force growth, and contemplates tax and regulatory reforms.
Strong and inflation does not continue to move sustainably toward 2%, we can maintain policy restraint for longer. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we can ease policy accordingly. We are attentive to the risks on both sides of our dual mandate, and policy is well positioned to deal with the risks and uncertainties that we face.
In his prepared remarks to the committee, Powell said the U.S. economy was not in recession and told lawmakers the argument for free trade still makes sense, but added that it was not the role of the central bank to comment on tariff or trade policy, but to react to how it impacts the economy.
I think the standard case for free trade and all that logically still makes sense. It didn't work that well when we have one very large country that doesn't really play by the rules. And in any case, it's not the Fed's job to make or comment on tariff policy. We, that's for elected people, and it's not for us to comment. Ours is to try to react to it in a thoughtful, sensible way and make monetary policy so that we can achieve our mandate.
Powell also said he did not believe that Elon Musk or members of his Department of Government Efficiency team have tried to access the Fed's secure payment systems. But the Fed chief did sound off as an issue that both banks and insurance companies are pulling out of regions such as coastal areas or areas where there are a lot of fires. Powell said at testimony is the first of 2 days of hearings on Capitol Hill that come as the Fed grapples with how policies enacted and expected from Trump impact an economy. Asia-Pacific markets opened mixed Wednesday after Federal Reserve Chair Jerome Powell signaled there was no urgency to cut rates. Hong Kong's Hang Seng jumped 1.7%. Japan's Nikkei 225 rose 0.25% after resuming trading following a holiday, while the South Korean Kospi edged up 0.4%. Australia's S&P ASX 200 traded higher by 0.6%, but Singapore and India's Nifty slipped. In the currency exchange, the Japanese yen jumped 0.7%, while most other Asian currencies were flat alongside the Philippine peso. U.S. President Donald Trump's planned 25% tariffs on all steel and aluminum imports would be added onto other levies on Canadian goods, resulting in a total 50% tariff. A White House official told Reuters on Tuesday Canada has not been told about the stacking of the tariffs. Earlier this month, Trump imposed 25% tariffs on most Canadian imports. However, those tariffs were paused for 30 days last week. The measure, which would take effect on March 12th, was met with opposition by Canada, with Prime Minister Justin Trudeau calling it unacceptable. World leaders are reacting strongly to Trump's March 12 executive order on metal tariffs each vowing some form of retaliation. Canadian Prime Minister Justin Trudeau said on February 11 that Ottawa would seek to highlight the negative impact of the United States steel and aluminum tariffs and that, if needed, the response from Canada would be firm and clear.
We will also be working with our international partners and friends, and if it comes to that, our response, of course, will be firm and clear. We will stand up for Canadian workers. We will stand up for Canadian industries.
Germany warns of a unified European response, signaling the start of possible global tariff wars.
If the U.S. leaves us no other choice, then the European Union will react in unison. As the largest market in the world with 450 million citizens, we have the strength to do so. I hope, however, that we will be spared the misguided path of tariffs and counter-tariffs. In the end, trade wars always cost both sides prosperity.
The European Union Trade Commissioner says the United States will be fueling inflation with its move to resume tariffs on aluminum and steel imports.
And by imposing tariffs, the US will be taxing its own citizens, raising costs for its own business, and fueling inflation. In addition, tariffs are not only harmful for the trading partners directly involved, but also risk having disruptive effects for many others, as well as the global trading system as a whole. Put simply, it is a lose-lose scenario, and we are currently assessing the scope of the measures announced overnight and will be responding in firm and a proportionate way by countermeasures. We will act to safeguard our economic interests. We will protect our workers, businesses and consumers.
Well, U.S. Vice President J.D. Vance said he would discuss trade and economic issues with European Commission President Ursula von der Leyen after Washington decided to impose tariffs on all steel and aluminum imports and stirred fears of a trade war. Meeting with von der Leyen at the U.S. ambassador's residence in Paris, Vance added that the Trump administration sees a lot of economic relationship to build upon with Europe.
The president of the European Commission and the former president of Estonia, who we met with when I was a senator just a couple of months ago, it feels like. But we're going to talk a lot about, I'm sure, some trade issues, some economic issues, and the Trump administration has been very clear that we care a lot about Europe. We see a lot of economic relationship to build upon with Europe, and we also want to make sure that we're actually engaged in a security partnership that's good for both Europe and the United States. So we're thrilled with the conversation. We're looking forward to it.
Yes, thank you very much, Mr. Vice President. Pleasure to meet you. And indeed, I had the pleasure today to listen to your inspirational speech at the AI Action Summit.
Yep.
And I like very much the part where you said we should look with optimism
Yes.
at artificial intelligence. I think the same goes for our transatlantic relations. We should look with optimism at our transatlantic relations that are deep and strong bonds. So very much looking forward to working with you and with the President.
In other news, global electric and plug-in hybrid vehicle sales in January rose 18% year-on-year as growth in Europe and the United States outpaced China for the first time since last February. Research firm Motion said on Wednesday Europe reported sales of 250,000, up 21% from the same month in 2024. The European car market started the year on a strong footing as CO2 emission targets came into effect in the EU, while holidays during the Chinese New Year led to a 43% month-on-month drop in the country's sales. Sales in China were up 11.8% year-on-year to 700,000 vehicles in the month as the country extended its auto trade-in subsidies into 2025 as part of an expanded consumer trade-in scheme in January to avert a slowdown in EV sales while reviving economic growth. In the U.S. and Canada, EV sales rose 22.1% to 130,000 in January. In the rest of the world, January sales rose by 50%. Tesla fell a day after Reuters and others reported a consortium led by CEO Elon Musk offered $97 billion to buy the nonprofit that controls artificial intelligence startup OpenAI. Chinese automaker BYD had also inked a deal with DeepSeek to co-develop new autonomous technology, seen as bad news for automakers like Tesla. China's largest automaker has taken a more cautious approach to its autonomous technology compared to Tesla, but the company is now rolling out its God's Eye advanced driver assistance system to all of its cars. Tesla has placed a big bet on its own autonomous technology, but the company has not received regulatory approval to roll out full self-driving features in China.
Well, you certainly can't avoid him. He's in the news every minute of every day, especially as he's live tweeting, his current responsibilities inside the government. So it's really hard to avoid that key man risk. And I think a lot of people are just concerned about his divided attention. What we know about Tesla, if we can separate Elon from the balance sheet for just a second, is that yes, China sales are slowing, but other segments of the business are actually growing and doing very well. The power segment, which includes charging and the Tesla Powerwall, is doing very well. Annualized growth there north of 30%. If that continues to go well, then it really doesn't necessarily matter what happens in terms of unit sales in China. They can balance that out.
Well, that nonprofit that controls OpenAI is not for sale. A consortium led by Musk said it had offered $97.4 billion to buy nonprofit OpenAI, another salvo in the billionaire's fight to block the artificial intelligence startup from transitioning to a for-profit firm. On the margins of an AI summit in Paris, OpenAI CEO Sam Altman told Reuters Tuesday they have yet to receive an official notice of an offer, but that it was ridiculous.
Can you react to Elon Musk's offer?
I have nothing new to say.
Well,
I mean, it's ridiculous.
Yeah. How so?
The company is not for sale.
Sorry?
The company is not for sale. It's like another one of his, tactics to try to mess with us. But
what about the amount he offered?
I have not paid it. I mean, it doesn't matter.
Well, the U.S. president and his billionaire backer slammed USAID for their White House meeting. Trump and Tesla founder Elon Musk described the foreign aid agency as corrupt and incompetent. Musk heads the Department of Government Efficiency, tasked by Trump to slash federal spending.
I think that there's some worthy things, but overall, if you say what was the bang for the buck, I would say it was not very good. And there was far too much of what USAID was doing was influencing elections in ways that I think were dubious and do not stand the light of day.
When you look at USAID, that's one. We're going to look at the military. We're going to look at education. They're much bigger areas. But the USAID is really corrupt. I'll tell you, it's corrupt. It's incompetent, and it's really corrupt. We have massive amounts of fraud that we caught. I think we probably caught way over a lot of billions of dollars already in, 2 weeks?
Yes.
And it's going to go to numbers that you're not going to believe.
Business and economy news from around the country in a moment. Newsfeed Business will be back. Stay with us on BNC.
Ito po si Father Nono.
Ako po si Father Fiel Pareha.
Ako si Risa Singson Kaupeng.
Kape at pandasal na po tayo. Ito po si Cardinal Chito Tagle.
at BNC. 12 noon doesn't mean break. We're always ready to give you the latest news, even at noon.
And those are the news this hour. Here at home, the Commission on Elections assures the Public Attorney's Office files new complaints. NGCP assures the public its Chinese investors are no threat.
Join Maya Rodriguez, delivering fresh news for you. Newsfeed at noon.
Keep it here on the Bilyonaryo News Channel.
Get to the latest stories.
The Philippines bags a historic bronze at the 2025 Asia-Pacific Women's Lacrosse Championship.
The updates.
Table tennis power duo siblings brought home medals from the WTT Youth Contender.
The scores and what to celebrate in the world of sports.
I'm Anton Rojas.
And I'm Erica Christensen.
On the scorecard.
Where sports is our business.
And business is our sport.
Only here on BNC, the Bilyonaryo News Channel.
Welcome back to Newsfeed Business. As global tensions rise, the Philippines looks to strengthen trade and investment ties with the U.S. under the new Trump administration. With China dominating supply chains, Manila is particularly pursuing a strategic deal to protect its mining industry and boost economic independence. Sujin Kim reports.
With economic and geopolitical tensions escalating in the region, the Philippines is bolstering its trade, security, and investment ties with the United States, a strategic move to secure its economic and national interests. The Philippines is pushing for a critical minerals agreement with the U.S. and Japan to maintain control over its mining industry and avoid overdependence on China.
Pursue it even more vigorously this time, because again, it will be mutually beneficial for both the United States and the Philippines. I think people should realize that the Philippines actually, the minerals that we have in this country is top grade. In the world, we're somewhere between number 2 or 3, or somewhere there, the top 3, what they call very valuable type of minerals. It's high grade. And that's something that we have. We have it here, and we should use that as a bargaining chip to be able to get better prices.
Currently, over 90% of the country's mineral exports go to China at low prices, a situation the Philippine government is determined to change by developing local nickel processing facilities.
This is an opportunity for the Philippines to finally really find a way to be independent in terms of our economic dependence. We have to make our economy really strong enough and resilient enough to withstand any kind of pressure, so that we have a strong base for us to be able to negotiate on what is best for our country. This is the only way we can survive this.
To prevent China from dominating the Philippine nickel industry, similar to what happened in Indonesia, where China now controls 90% of the sector, the government is actively seeking investments from the U.S., Japan, and South Korea. Experts say a U.S.-Philippines free trade agreement is now more likely under a second Trump administration, especially as the Philippines has the lowest trade surplus with the U.S. among ASEAN countries, standing at just $4 billion.
The climate for the U.S.-Philippine relationship is a positive one. I mean, there are no big negatives floating around.
However, experts recommend a more strategic approach, focusing on sector-specific free trade agreements, particularly in mining, semiconductors, and renewable energy, to accelerate negotiations. Government officials also reassure that the Philippines has little to worry about regarding U.S. trade protectionism, as its trade surplus with America remains relatively small. Sujin Kim, Bilyonaryo News Channel.
Analysts expect the Bangko Sentral ng Pilipinas, or BSP, to cut monetary policy by 25 basis points. Christina Olang, research head at First Metro Investment Corporation, tells the Bilyonaryo News Channel this is due to the within-target inflation rate. If realized, this will bring the target reverse repurchase rate to 5.5% from the current 5.75%. Latest data from the Philippine Statistics Authority show the consumer price index remained steady at 2.9% in January as lower utility costs offset a spike in food prices. This is within the 2 to 4% target range of the BSP, 2.5 to 3%, or 3.3% in January.
Be looking at what would be the motivation, what would be the consideration of the BSP for cutting rates. First of all, inflation is within target. It may be on acceleration mode coming from 1.9 in September, 2.5, 2.9, and then 2.9 last January. It's within target. Core inflation is also moving lower, 2.6%, and rice is going to be capped. The price of rice is going to be capped at 55 pesos per kilo and 38 pesos per kilo on the lower side. So all of these are very good indications that there is really room for the BSP to cut interest rates. And secondly, government needs to have some room for lower cost of borrowing, because the national government is funding a deficit of like 1.3 trillion this year. They need to borrow about 1.3 trillion also, a net on net finance basis at 2.5 on gross. So they need to have a lower cost of borrowing. And thirdly, our growth, if you remember, our personal consumption expenditure, which is about three quarters of the economy, has slowed to 4.8%. So slowing economy should prompt the BSP to cut interest rates to stimulate the economy. So those three reasons, I think, would be the major considerations for the BSP to cut.
Ulang, meanwhile, says the Philippine Stock Exchange Index, or PSEI, may drop to the 5,800 level amid uncertainties in the United States, peso's volatility, and weather disturbances.
So things are moving very fast in the U.S. They have slapped 25% on steel and aluminum shipments to the U.S. That's really one of the next big thing in as far as this tariff thing is concerned. And so market sentiment's really very negative now.
Philippine shares bouncing back to the 6,000 level amid investors' bargain hunting amid the Bangko Sentral ng Pilipinas, or BSP's monetary policy meeting tomorrow. The PSE index ended higher by nearly 1% to close at 60.44, finishing the day as the fifth best performer in Asia. All sectoral indices ended in the green, with holding firms rising the most by more than 1%. But decliners still outpaced advancers, 103 to 74. Value turnover totaled 5.8 billion pesos. Today's most active stocks ended mixed, with Mondenisin rising the most at nearly 6%. That's after Mondenisin had been assigned to the small cap index by the MSCI. On the other hand, Globe Telecom has the biggest decline, falling at more than 1%. At the foreign exchange market, the peso is currently trading at 58.16, strengthening from the previous close of 58.19 to the US dollar. It's ahead of the central bank's policy meeting. That's a wrap of today's Newsfeed Business. Thank you so much for making us your daily source of financial insights. I'm Raine Musñgi. Join us again tomorrow as we bring you the stories that help you plan your next big, bold moves in business. Only here on the Bilyonaryo News channel. Follow the Money is next at 4:30. See you then.
Kia wrapped up 2024 with a 33% growth in sales, moving 6,692 units. But they're aiming even higher this year, with sales expected to nearly double, with the Kia Sonet hitting all the right notes.
The Kia Sonet, if you recall, was introduced last June of 2024, and it made up around 70% of our sales. So with that, we grew 33%, and we see further growth this year as we sustain the Kia Sonet for the full year. So this year, we are looking at to hit around 12,500 units for Kia this year.
Buendia says the key to success is keeping customers at the heart of it all.
When we were designing the Sonet, we had a lot of research, we had a lot of FGDs, we had car clinics and all. Also, with the Sorrento, we did the same thing, because we know that listening to your customers and giving them what they actually need is the winning formula.
Kia has 40 dealerships across the country and is focusing on strengthening each one to offer top-notch customer service. Meanwhile, Bilyonaryo heir Jaime Alfonso Zobel de Ayala shares that 2025 is shaping up to be a year of big change.
Our vision for 2025 is clear. We're here to accelerate the transition towards a cleaner, smarter, and more sustainable future. We're doing this by expanding Kia's electrified vehicle lineup, advancing our commitment to a more sustainable way of life, and working to make electrified vehicles more accessible to Filipinos nationwide.
He says AC Mobility's charging network, now boasting 141 points and counting, ensures owners can charge up wherever they go.
Ladies and gentlemen, we give you the new Kia Sorento Turbo Hybrid.
To kick off the year, Jaime Alfonso also introduced the Sorento Turbo Hybrid, the first time this nameplate is powered by this engine. Price ranges from 2.188 to 2.888 million pesos. Kia offers a range of powertrains worldwide, including internal combustion engines, battery electric vehicles, and hybrid models. In the Philippines, AC Mobility says it is committed to giving Filipinos more options when it comes to their daily driver. For BNC Mobility, G. Baroga.